The FDIC is warning against rumors of banks being in trouble. Are they just rumors? We're going to talk about it and how this ties in with the Dodd-Frank bail-in provisions that were set in place after the financial crisis. Hey everybody, JJ. It is Bo Boom Bear Bust. It's Friday. Happy Friday to everybody. Hopefully, if you're still working, you get a couple days off. And if you are out of work right now because of the craziness happening right now in this world, I hope you're enjoying your time off and finding something to do with your time. All right, but let's get into it here. We're going to talk about the FDIC versus bail-ins. We'll talk about what that means in a minute. We're going to talk about security versus risk when it comes to where you're keeping your money. We'll get into that. And why is the FDIC concerned? Is it to protect people? We're going to answer all those questions, or at least analyze these and have you maybe answer some questions down in comments on what you think. So let's start right here. This is at the FDIC's own YouTube channel, and this was just put out, 3 days ago, March 24th. I have seen a few people posting this and talking about this on Twitter and various locations, but we're going to tie it in again with the bailout provisions and to try to get a better understanding is, our money safer in the banking institutions or at home in our own hands? All right, first of all, let's take a listen here. This is Jelena McWilliams from FDIC.
We're living in unprecedented time. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC insured bank.
There you have it. So a couple points there that she makes. One is that no one has ever lost money in an FDIC insured bank since FDIC was initiated back in 1933. And why do you think she's talking about this right now? Well, we know that a lot of people are growing more and more distrustful of the banking system. Right, more and more people are starting to pay attention on what's happening in the economy, even though it's still a small fraction of the population. But the reason she's concerned, and FDIC I think is concerned in the entire banking system, I think, is because they know that they are running a fractional reserve banking system, meaning that they only keep a very small fraction of cash in deposits at any given time, yet they can loan out many, many more times what they have in deposits. And now, thanks to the current administration, banks have been completely unleashed. They do not even need to have any reserves in their coffers there, so to speak, in order to loan out as much money as they want to loan out. So they could have a few concerns here, and I'm talking about FDIC. One concern will be if they ever reverse that requirement and they, again, in the future, have a reserve requirement for the banks are going to be highly under the reserve requirement that's going to be put in place again. Maybe it'll never get put back in place, but that could be something that they're looking into the future and have a concern about. All right, but let's take a step back here and just ask ourselves, why even come out with this in the first place if the banks were not in trouble? Right? Again, if the banks were not in trouble, why bother? And that's why I put the question on here. Is it to protect people? Because if they're not concerned about their own system and not having any liquidity or enough cash to hand out to people that need it, is their message being put out there simply because they want to protect people? Like she said, the cash may not be safe at home in the mattress. And it's a valid question. It's a valid point. Maybe the cash is not safe at home. It depends on you. Right? I read a story about someone that had a bunch of metal in one of those small safes. And it was a small enough safe where they can just pick it up and carry it, even with all the metal in it. So it wasn't heavy enough where someone couldn't just break into the home and take the safe. And the same is true for cash somewhere else in the house, in a shoebox or something like that, under the mattress. So it depends. Is the FDIC going to be there if there is a problem with the banking system? Well, we know the banks, they can now issue as much debt as they want. Now for this, let's take a look at this Investopedia article. This is why bank bail-ins will be the next new bailouts. And it begins here, which we've talked about this several times, but here's how they put it. The financial crisis of 2008 ushered in the term too big to fail, which regulators and politicians used to describe the rationale for rescuing some of the country's largest financial institutions with taxpayer-funded bailouts, heeding the public's displeasure over the use of their tax dollars in such a way. Congress passed the Dodd-Frank Wall Street Reform Consumer Act of January 2010, which eliminated the option of bank bailouts, but opened the door for bank bail-ins. That's right, bail-ins. Sounds even worse than the bailouts if you ask me. So bail-ins means they can swipe your money if you have it in a deposit account with the bank. Now here's where it ties in with the FDIC. I'm going to read this here. A bank can undergo a bail-in quickly through a resolution proceeding which provides immediate relief to the bank. The obvious risk to the bank's depositors is the possibility of losing a portion of their deposits. However, depositors have the protection of FDIC insurance, insuring each bank account for up to $250,000. The banks are required to use only those deposits in excess of $250,000. So if you have more than $250,000, it might be a good idea to put them in different institutions if you want to keep them in a bank at all. Now you probably heard my opinion on this. I do keep some money in the bank. I do keep most of it out of the bank, which could be a risk. Again, somebody could break in and steal it. I think it's in a very secured spot right now, but you never know. You also have the risk of a catastrophic loss like a fire or tornado. Something takes out your home. Hopefully you have a nice big safe where it's still not going to get damaged, but you still never know. But here's something I thought was interesting. If you do end up having to rely on FDIC to get your money back, it's still going to end up being funded by, quote unquote, the taxpayer, because it's going to be paid for with, guess what, adding more debt. That means borrowing more from the Fed. Right? So either way, it all comes back to the taxpayers. Will they ever raise taxes to try to pay off this debt? Well, if they do, it's going to be game over. You see that consumers are pretty much tapped out here. Right? So we covered FDIC versus bail-ins, security versus risk. What I mean by that is, are you keeping the money in a safe place if it is out of the banking system? Is it buried in your backyard? Is it in a safe? Is it in your wallet sitting on the table? What do you think? This is going to be an opinion. There's no way to prove what the intentions are here behind that woman that we heard from FDIC. Are they concerned about the people, or are they more concerned about people taking out money and then the banks not having enough money? And then from that point, the banks will have to continue to restrict cash withdrawals to a larger degree, which would then cause even more panic, people hearing about it, and therefore rushing to get their cash out because they hear that banks are limiting withdrawals. I think it's the latter of those two reasons from FDIC, but I could be wrong. Maybe they're just looking out for the people. You know, maybe they're good folks over there at FDIC. I don't know. I don't want to pass judgment, but let me know what you think down in comments, please. All right, I should add, there's also people out there that think the FDIC even existing is a moral hazard because it also encourages banks to do reckless lending, because at the end, the banks know that the federal government, or in this case the Fed, is going to have their back. So FDIC, in their eyes, encourages bad behavior. I can definitely see that side of it as well. Also, before we go, if you'd like to support the channel and at the same time get yourself some food security, please check out the link below. I've got the best deals from Amazon, and seeds are actually selling out and are on back order at some of the sellers there. So you might want to get them while you can. There's the best deal. We're talking about thousands and thousands of seeds to keep as a backup, or to just go ahead and start growing some fresh food in your backyard, just in case we continue to see this panic that's spreading across the land. Also, if you got something out of this video, please give us a thumbs up and share this. But most importantly, come back. We hope to see you here again on this channel. Hope you're well. Bye for now.